What is going on in China, and could it threaten your prosperity? Let's see. Did you know that China just cut its interest rates? Wait, isn't the rest of the world increasing interest rates because of higher inflation? That's right. So why is communist China going in the opposite direction? Let's take a look at what's happening and try to unpack how this could affect you. If you've watched any economic news during the past few months, I'm sure that you will have seen at least one news story about China's economy. Social unrest, people protesting in front of their banks after their accounts were frozen, people boycotting payments on over $3 billion of Chinese mortgages. This sort of insurrection is unheard of in China, at least as publicly as we're seeing it now. Of course, the CCP has not let this go without attention. However, footage like this has spread across the internet. The stark fact is that China's property market is imploding. Now, the reasons for this are complex. The big driver is in the property developers and their finances, which in recent times have spiraled into a deep quagmire. A lot of people in China have their savings wrapped up in the property market, so they are in trouble too. What we appear to be seeing is a hype of unsustainable growth that is on the verge of crashing and burning. Or is it? To try and answer this, let's take a look at what's caused the bubble in the first place. Over the past 2 decades, there has been a move for the rural population to move to urban areas. This hasn't been a trickle. Literally hundreds of millions of people have moved into cities, and in turn has driven an explosion in urban property development. Being able to own your own home has become an essential societal goal. In turn, this has led to families and extended families clubbing together just to be able to afford a deposit. Off-plan sales exploded as a result of this hype. People take out loans and start paying back mortgages before there is even a property in existence. Could there be an Italian flavour to this? Oh yes, Charles Ponzi would be proud. We can explain this by asking the question, what are the developers doing with the revenues they receive from the pre-sale rounds? Well, they shuffle it around their business and essentially use it to pay off last year's development, and then start to collect next year's deposits to pay off this year's developments. A lot of them are getting further and further behind along the way. Clearly this isn't sustainable. And no, it isn't. As soon as there was a slight downturn in demand, the money just wasn't there to fulfill the development promises. In turn, this led to project delays and people seeing that their properties weren't being built or moving in to find no plumbing, water or piping, decided not to pay down their mortgages. A vicious cycle didn't take long to develop. Madness, you might say. Well, yes. 3 technical measures have been put in place by the CCP to deal with this, called the 3 red lines. Very apt for communist measures. Firstly, to get more debt, developers must show liabilities not in excess of 70% of assets. Secondly, net debt must be no greater than 100% of equity. And thirdly, cash reserves should be able to cover 100% of their short-term debt. However, while these measures might have stopped developers getting into trouble in the first place, they haven't impacted what has already happened. In fact, in 2021, around half of the Chinese developers in the country were in breach of these measures, with little hope of remedying their dire situation. Without the ability to get more finances, these measures have caused the developers severe cash flow problems. The Evergrande story sums up a lot of the issues. This is the biggest single defaulting homeowner in China. I'll come back to Evergrande. It isn't the only one, however. There are many, many more also in default. Do you remember in the US when we had the housing market implosion at the end of the noughts? This led to the worldwide credit crunch and a severe worldwide depression. At the same time as the liquidity squeeze on the developers, the CCP's zero COVID policy has meant that entire cities and whole regions have been placed on a complete lockdown, meaning economic activity pretty much came to a halt. The current civil unrest started with a letter. According to the Japan Times, 590 words which were written by angry buyers of the half-built Dynasty Mansion project managed by Evergrande. The letter essentially said, "Resume construction on our homes or we will stop paying our mortgages." This blew up on social media, WeChat and TikTok and became a rallying cry. Similar letters using this one as a template were sent. Developers in cities like Shanghai, Beijing, Shenzhen, Zhengzhou all felt the impact of the boycotts. As we've seen, unrest followed. The government in response to this is trying to make money cheaper, which is what reducing interest rates will do, to try and provide some relief to the property sector. Now, the property sector itself accounts for about 30% of China's economic output, so very significant and could easily impact the rest of the economy. So is this just an internal Chinese issue or something that could impact the rest of the world? The big difference between the global financial crisis and the situation now going on in China is that their financial system is somewhat closed. Their interest rate for capital is very tightly managed by the central planning structure. Also, there is not a lot of foreign money in relative terms in China, so contagion into the rest of the world could have limited impact. However, it is not just their property market which is in crisis. Their internal wider economy is experiencing a downward pressure too. Just a word about the economic measures. If there is inflation coming and you reduce interest rates, then you face a high risk of creating a cycle where the reducing interest rates fuel higher prices, and this in turn depresses the economy, leading to more interest rate cuts, etc., etc. This form of economic depression was last seen in Western economies in a significant form in the 70s and early 80s, where a name was coined for it: stagflation, a portmanteau word made up of stagnation and inflation. So what did the government actually do? Well, they cut interest rates by about 15 to 20 basis points, which could be considered small given their interest rates are still at around 3.5% to 4%, and this is still well above the rest of the world. So perhaps at this point the impact will be slight. What about the banking sector? Well, earlier this year, 5 Chinese banks froze customer accounts so that about 400,000 people couldn't access their savings accounts. If this spread, it could be the last straw. The government doesn't want to find out and has created a war chest of around $148 billion to bail out the real estate market. And the wider impact of all of this? Well, China's economy for years has been on a 6 to 8% growth trajectory. Revisions to this recently indicate that it's going to be 3 to 4% lower. So is this significant? Could the banking and the property market economic issues spread? Well, on the one hand, we have the optimists who think that the worst of the issue is over and there will be a gradual rebound from what is now the bottom. However, on the other hand, some economists are warning that the impact of this is going to be far worse than we currently anticipate. A global housing crash on steroids. This is China's GDP since the 1950s. Nothing much going on until we saw the fastest, largest economic growth in all of human history. And just look at the development projects. Copies of Paris together with the Eiffel Tower, for example. But no one lives there. Because of the housing bubble, China has an estimated 60 to 70 million homes empty. That's enough homes to house an entire country. And this is despite the fact that properties in Shenzhen and Shanghai are actually more expensive than in LA, despite the average wage in China being around $10,000 versus the $60,000 in America. Before I wrap up with the Evergrande story and conclusion to the original question on how it's going to impact you, if you find this informative, then please subscribe for more money related videos and hit the notification bell so that you don't miss out on future videos. Let's get back to our Evergrande case study and explain why it is so important. Evergrande is massive. It has about 200,000 employees, raked in more than $110 billion of sales in 2020, and owns more than 1,300 developments in more than 280 cities. Many of its property projects have been delayed since last year because of the company's liquidity issues, as it defaulted on payments when they fell due. And why was this? Well, it was just the small decline in economic growth together with COVID that stopped Evergrande's supply of ready cash. In October 2021, Evergrande announced that a $2.6 billion asset sale that would have been used to pay an $83 million interest payment that it missed in September 2021 had failed to close. In November 2021, Evergrande defaulted on 3 more bonds after missing the grace period for interest payments. Evergrande's total debts are estimated in the hundreds of billions of dollars. This was one of the reasons for a drop in many stock market indices in the fall of 2021. So already we can see that we have the ability of one Chinese company alone to impact the worldwide economy. The reason is that investors see the problems as being indicative of the economy of China as a whole. People who have been publicly critical of Evergrande have been censured by the CCP. For example, even as long ago as 2016, the Hong Kong Market Misconduct Tribunal suspended American short seller and Citron Research founder Andrew Left for 5 years. And this was due to his publication of a highly critical report on the company. Evergrande in recent months has been trying to sell off subsidiaries and other assets to enable it to pay off debts. We have yet to see if this strategy will be successful. As we've seen, whatever happens to Evergrande is seen as symptomatic of the wider property market, and a collapse there will foreshadow a complete collapse of the property market, which in turn will dramatically reduce China's GDP growth. The government's war chest is its biggest hope of creating a so-called soft landing for the economy. Now, these Chinese problems are not happening in isolation, of course. On top of this, we have the Russian invasion of Ukraine, which in itself is causing a global energy crisis. The impacts for you and other individuals are manifold. Contraction of the industry in which you work, leading to layoffs and reduced or reduction in wages. Inflation, meaning your money stretches less far than it did a year ago. It seems that the world is on the edge of a precipice. Will it be able to pull back from the edge? Only time will tell. Bye for now.